Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions from your own financial conclusions and make your own financial decisions. Today is Saturday, July 13th, 2024, and this is Blockhead Traders Weekly. In this week's episode, it's just myself, Sprocket888, and Q2 earnings season has just kicked off. And right out of the gate, I hopped into Delta Airlines, and we are going to take a look at that earnings trade in this week's episode. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. You can also find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. And if you can't find it there, let us know and we will get it there. But let's hop to this week's content, Delta Airlines and Q2 earnings. There wasn't much action out there this week in all of my screeners. Honestly, things have really kind of been going up. Volatility is at an all-time low, and so there's not a lot of premium selling out there to be had. However, in my screenings, Delta Airlines did show up, and I decided, hey, it's summertime, it's travel season, it fit the screener, why not take a stab at it? This trade is a little bit different than my normal earnings trades. Honestly, the setup was traditional. The play was pretty traditional. But where it ended, I really decided to kind of call an audible at the last minute. And we'll really see how that kind of pans out for me. I'll show you kind of what I was looking at and what I'm thinking. And I don't know if it'll pan out for me or if it'll end up being a mistake. But let's take a look at it. And so to start off, let's go ahead and take a look by the numbers first. And this is the traditional chart that I kind of show up here. This is the earnings strangle. So anytime we go into earnings with extended volatility, which Delta had, it was roughly about 60% historical volatility. So not super high, but high enough where I was going to look for that mean reversion or that collapse in volatility. And whenever I take a look at these, I'm really looking at a 20 Delta strangle. So that's pretty much what I opened. It was the week of earnings expiration. So that was this particular week expired on July 12th. I entered the trade the day before earnings announcement, which is pretty traditional, pretty run-of-the-mill, exactly what I'm looking for. Extended volatility, you take the last trading day that you're able to enter it, you open the 20 Delta spread, and you kind of see how it pans out. So as you can see here, I was able to open that at the 44 put and the 51 call. That had 2 days to expiration, and I was able to collect 96 cents on that. So I did 5 of these contracts to adjust for the position sizing that I felt was appropriate. Honestly, I went a little bit heavy because there wasn't much going on as far as premium selling. And so I thought, it's the only play I'm going to put on this week. So let's go ahead and throw another couple contracts on there. Probably 3 was more the ideal position sizing that I like to play, but I put on two extras for you. Now, we'll switch to the Flappy Bird chart in a minute, but this was kind of an interesting phenomenon because it basically breached the 44 call. It dove down as high as, I believe, almost 42. It dove down to 42 pre-market, and then it started kind of recovering in pre-market. Then it fell off, and kind of going into expiration, I was out of the money, and I could have closed it out successfully out of the money for almost about a 50% profit, which is usually what I try. But I decided, because of the way the price action bounced off that 42 level, and I'll show you that in the chart, I said, let's ride this thing right to expiration and see where it is. And I said, I'm going to push it all the way to the very last day. If we are in the money, I'm going to go ahead and roll the put side because I feel a little bit slightly bullish on this. And like I said, there wasn't a lot of other plays kind of coming up. And so I wanted to kind of roll the dice a little bit, which is a little atypical for me when it comes to earnings. Usually I'm going to open these things up and I'm going to close them as soon as I hit 50% profit. We did get to about that 50% profit towards the end of the trading day on Thursday, the day of earnings. However, I went ahead and held on to it into Friday. It lost quite a bit of ground on Friday and then closed actually in the money. So just before close, I went ahead and I rolled this out to the August monthly. Now, I could have kept the 44 strike. I didn't actually need to change this strike, but I did. So I decided that because there really wasn't a lot of volatility, this thing really had the full volatility contraction. So we were 0% historical volatility after earnings, which means the volatility of Delta was lower than it had been for the past 52 weeks. And so that was kind of hindering the ability to get a decent amount of premium out of this roll because we were going from July 12th expiration to August 16th. So I was kind of adding 30 days here. And I decided to pull that up to the 45 strike, which basically let me add on a full $1 of premium. Now, keep in mind that that is a $1 of intrinsic value that I was kind of putting into there, going above where it currently was at by a whole $1. So this, we'll see how it pans out. But like I said, I was slightly bullish on this thing. So normally this would have rolled for about 90 cents. You can see that volatility difference, right? So I opened the trade on July 10th and expired on the 12th, right? So July 10th, there was 2 days to expiration and I got 96 cents for that $44 put, which was actually a 20 delta. So I went to go roll it, right? I added 30 days. So I had 28 days longer. And it was practically at the money of 44 because it was just slightly below 44 in the money by like maybe 60 cents when I rolled, 50 or 60 cents. And I was only able to get, 30 to 40 cents of premium for that extra 28 days. So I went ahead and I sold some more intrinsic premium. So that is the 5 contracts I rolled for $1.90, collecting another $950 in total. So that brings the total collection that I got from this trade to $1,430. And it is asking for or requiring a buying power of about $5,000. So that's about a 29% return on capital. Now, keep in mind, this trade is probably going to go several weeks. So unless there's a dramatic price appreciation in Delta, this trade is probably going to be on for, I would guess, about 2 to maybe 3 weeks. So what exactly am I talking about when I talk about the chart? So we're going to switch over here to the Flappy Bird chart. And what I want to show you is this is the very brief earnings play where I opened it up, centered this right at the 20 delta, went 20 delta up, 20 delta down. That's the 44 strike here on the bottom and the 51 on the call side. You got this price action where we drop down. This wick comes down at earnings down to 42, then kind of promptly bounce off of 42. Gains throughout the day, reached up to about 45. And then on Friday, we went from about that 45 and ended up closing about 43.60 below. So 40 cents there in the money. So why did I do this? Because I could have closed this out for a 50% gain. Why did I not just exit there, ride this out? So the reason I wrote it out is because I thought, hey, you know what? If this goes ahead and finishes out of the money, even if it gives back a little bit and we stay above that 44, I'm going to go ahead and I'm going to have a 100% winner or like a 90% winner in closing it out just before the end of the bell. But the other thing was really the way that this reacted right here at the 42 level. So this is on a 4-hour candles, and I'm going to zoom out. Now, remember, what we always talk about on this channel is that earnings are price action accelerants. And so if I dial this back, there is an interesting level here that is roughly $42. So maybe between 42, 44, 42.40, maybe 42.80. You can see right here we had 2 kind of bounces off of that level as kind of a resistance. We ended up gaining that level, and that was a level of support as we kind of rode up. Now we're kind of coming back down, and we're reacting off this 42 level. And that's what caught my eye here with Delta, is that potentially here we're reacting in a positive way to this $42 level on this chart. And what that means to me is there is a high probability or a likely probability that this was actually support at that 42 level from this pre-market wick, and that we could be gaining from here. And so what I also threw on here is that roll. So that roll is where I went up $1 in intrinsic value. And now I'm looking that sometime here before August 16th that we are going to see a price appreciation above that 44. I'll slide this back because it's actually a little bit off. August 16th is here. But that is Delta, and that is what I was looking at when I took this earnings trade. Quick episode this week. As you can see out there, just one earnings trade, Delta, 20 Delta Strangle. You know, I'm still in it because I rolled it out on the put side, added $1, collected $14.30 so far. We'll see how it pans out. I'll keep you guys in the loop on this trade. And, you know, keep watching that thetagang.com/sprocket888. That's where the final results of this trade will go in. I've entered the roll. I have my comments in there. So hopefully this is interesting or inspiring to you, or you can kind of at least understand a little bit more about earnings and my premium selling. Hopefully you're finding trades that you like to take out there and you're having some good luck with your trades. Good luck out there. And remember, think outside the block.